Oil prices continue their push toward $100 a barrel, hitting their highest level since 2014 today. Obviously, the Russia-Ukraine developments getting the attention. But remember, all of this is coming into an already tight market. Demand has been above supply for a long time. That goes not only with oil, but with natural gas in Europe as well. Jim Lebenthal, I get it. This is going to get the attention. The people I'm talking to that I trust in the oil market say maybe $3 to $6 max is the bid on oil because of what's happening. But the tape has already been strong, and 100 was probably happening whether this occurred or not. Your take on oil and your take on oil stocks, which, as bad as the year's been, they've been great.
Yeah, and I think it's very clear that what you just implied is true. There is a systemic supply-demand mismatch globally. We know this, and this is before Russia does whatever Russia does. It's for that reason, Sully, that I have one of the highest beta to oil plays in my portfolio, which is Transocean. I'm sure you know the name. This is a company that when oil was $20 to $30 a barrel, nobody wanted to rent their rigs to go out and drill for the highest cost barrel of oil, which is out there miles deep under the ocean. Yeah. But now, as you pointed out, oil at $90 to $100 a barrel, people are going to start taking those drill rigs and drill ships out of cold storage and starting to put them to use. So I'm overweight energy. I will admit, Sully, I did trim Marathon Petroleum. That's probably a name you know well as well. It just had done so fabulously well that I had to take the profits there. But still, this is a systemic mismatch between supply and demand. It's going to go on for many quarters, if not a couple of years. Yeah, in fact, Joe, and Jim, if you said this, I apologize, kind of doing two things at once. Transocean just signed one of its biggest deals ever for deep water exploration. I think it was more than a $400 million contract. You forgive me, I can't remember with whom. But, Joe, you do wonder if what's going on over there, and I know, oil is truly global, nat gas there is a little more regional, but what's going on over there will, despite some obvious political opposition, sort of have, a quiet effect where there's a wink and a nod to U.S. producers and saying maybe we need to produce a little more here so we are less reliant on this kind of stuff happening around the world. Your take?
I'm not so sure that actually happens, Brian. I mean, I think it's very clear, and a lot of the appreciation in the price of oil came because of a clear policy adjustment from the previous administration to President Biden's administration. So you had the CEOs, the CFOs for E&P companies really thinking about what? Thinking about protecting the dividend or maybe growing the dividend, buying back their shares and worrying about ultimately their stock price. There was not this incentive to invest that incremental dollar in the wellhead and grow production. So I'm not so sure ultimately that you will be seeing that. I think you're correct. I think the price of oil was going above $100 without what we're now confronted with as it relates to Ukraine and Russia. You've got a confluence of an incredibly strong headwinds from rising demand coming out of a pandemic, dwindling supply, policy adjustments, and now geopolitical concerns. So it's reflected in the curve of oil. I mean, I've been in the oil market for the last 30 years, and when the spot price of oil is $93 today, and you go 1 year out and it's $10 less than that, it's telling you it's a very tight market, and it's a market that you want to be investing in, both in terms of derivatives and energy equities.